Hey there, everybody. My name is Ryan Schul. I have been doing these YouTube videos for about 5 months now. I have about 150 videos. I started about 150 days ago, and my goal is to 300 videos to be. And all the videos are going to be mostly about data science, machine learning, predictive analytics, things like this. Okay, deep learning, artificial intelligence. But I do have a couple videos focused just on Excel, Microsoft Excel. I know it's a very popular software tool, so I put together a couple of videos on that just to help people get a better appreciation for the ins and outs of Excel and nuts and bolts over there. And I would put out a couple of videos on SQL, so you can check those out if you're interested in SQL. And I think these things tie in very nicely to Python. By far, most of the videos, 97 to 98%, are focused on Python. We're going to look at some Python code today, and specifically we're going to try to analyze news sentiments coming from Google and try to predict investor confidence. Okay, we're going to use a Jupyter notebook to do all this work. So the genesis of this came to me a short time ago when I was at an investor conference for Wall Street professionals, and I got into a conversation with somebody about whether or not you can interpret or somehow digest news articles that come from whatever source. Take your pick and can be from multiple different sources. And how would you analyze that and use that to potentially predict future stock prices? So the discussion was passionate. It generated some ideas for myself and for this other gentleman that I was talking to. So I came home and started working on the code, and I put this together. Okay, so let me share it with you. Now, my hypothesis is I want to analyze news sentiments. This is going to come specifically from Google. It can be whatever you want. It can be MSNBC, it can be Bloomberg, it could be CNN, um, Fox. I mean, take your pick. There's so many news outlets out there, right? Whatever you want to do. We're going to analyze the sentiment, which is the feeling: positive, neutral, negative. Overall, is this is a positive outlook for a stock based on the news that's coming out about the stock? Is it mostly positive? Is it uplifting? Is it mostly negative? And um, would I have a concern about the stock price if I read several news articles coming out at the same time? Or is it mostly neutral? Is the news neither positive nor negative? Okay, so we're going to try to analyze the polarity and the subjectivity of these news articles and try to use that to predict future stock prices. And we're going to validate this assumption that this can be done. I'm going to say this is possible. Okay, so here I have some code. This is just a script I picked up off the web. Just Googled for it. If I Google for it, I found this. So I got Google News. I'm going to use the TextBlob to analyze this, and I'm going to print out the sentiment polarity. This is a positive or a negative um, feeling or sort of position of the news article, and then the subjectivity. Okay, so things can be objective. You can say the sky is blue, an apple is green, could be red. I guess an apple could be red, and a banana is yellow for the most part. Those are objective. Subjectivity things are I feel like this, or I feel like that, or um, somebody makes you feel a certain way, right? That's more subjective. So objectivity and subjectivity, we are going to look at these things. So Control Enter to run this, okay, and it'll take a minute or so to fire, and we'll see the news articles printed right below this cell in my Jupyter notebook. Okay, so we get the top 10 from this API endpoint. Now we're going to need more than this. I'm going to take about 1,500 or 1,600 in just a minute. You'll see that. But let's take a quick look first and see what's going on here. So Market Clubhouse, morning news, trade strategy for SPY, Q, Apple, Microsoft. So this is, these are what, just equities. I think they all trade on the S&P, not the S&P, the Dow 30. I think they trade in the Dow 30. So the overall polarity is 0, subjectivity is 0. So nothing, let's see here, 0, 0, 0, 0. So this is -3, right? So Q1 estimates, but Q2 guidelines likely fall short. Okay, so fall short, that's slightly negative. I get it. And subjectivity, this could be somebody's opinion. Is it really falling short? Did the company still hit its guideline? Is it going to have to adjust its guidance downwards because Q2 earnings are coming up short? So this sounds a little bit subjective. This sounds definitely negative. 0, 0, 0, 0, 0, 0. These are mostly 0. So that's not very helpful. We need more news articles, and we need more meaningful writing here. So is the writing going to be mostly positive or mostly negative? If it's mostly neutral, it's not really going to help us a whole lot, okay? So how to incorporate this into our analysis? We're going to use some feature engineering. We're going to aggregate sentiment metrics, daily, weekly, etc., so on and so forth. Use regression models to predict continuous variables. I actually did a classifier here. So classifiers are great for predicting labeled data, right? So rake height, rate cut, things like that. That is not numeric. That is labeled. Hike is going up, interest rates are going up, or interest rates are going down. If the Fed decides to cut interest rates by a quarter basis point, we'll see that. Time series forecasting, ARIMA, LSTM, long short time series modeling. And then data sources are going to come mostly from Google News, not Nose, Google News. And it's going to be an API endpoint that we hit to get our news. Okay, so we're going to look for Apple because we're going to do an analysis on Apple stock and I'm sorry, keep misspeaking here. I should just get someone to narrate these things for me. Okay, I'm good at doing the analysis. I'm not good at talking about the analysis. But anyways, we're going to look at Google News and specifically Apple. So any article related to Apple, we're going to pull that. Okay, and we're going to pull Apple stock and compare the news of Apple from Google News to the Apple stock. Okay, we're going to compare those Apple prices to the news feed. Okay, so that's what we're doing here. And we have some code here. We're going to look at the time of day. I'm going to go through a range of 1 to 20. Okay, there should be about 10 news articles per page. If we go over here, you can see I just got 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's 10 per page. I want to go through 20 pages. So I'm going to go from 1 to 20 to get more. I can't just do an analysis based on 20 news articles. I really need more like 15, 16, 1700, maybe even 1800. It has to be like at least several hundred. It can't be 10. Okay, that's just too sparse. The data set would be too sparse. I can't do a robust analysis on it. So I'm going to loop through 20 pages and pull probably less. Some of these have less than 10 articles per page. So come up a little bit less than 2,000, but we'll have a substantial number to do a robust analysis, okay? And you'll see it's pretty meaningful. It's pretty cool the way this stuff works. I tested it last night, and I was pretty impressed with the outcome. So we're running the code. We're going through 20 pages, pulling 20 or so articles per page, give or take. Might not be 20 exactly, but hopefully we get close. I put an incrementer in here so we can see where we are. Once we get close to 19, I think it stops 1 through 19, goes up to 20. I don't think it hits 20. We'll see. Okay, we're halfway there. And it's chugging along. And then once this comes in, we're going to assign titles to these headers. I want title, sentiment, polarity, and sentiment subjectivity. Okay, so again, this is like positive, neutral, negative, and how subjective or objective are these news articles. That's what I want to look at. Okay, so I'm going to pull everything in, put that into a data frame, and we're going to look at the results. Okay, so let us see. I still see the hourglass in the tab, so it's still running, but it should be virtually done. Okay, I think it's done. Let me run this cell to refresh it, Control Enter. We'll do the job. Okay, so 2090. Okay, so we have good articles here going back to 1/8. So January 8, 2025. So we have good coverage today. Is the 14th. So what is that? About a week or so? 7, 8, 9 days? 9, give or take. Okay, so that should be enough. Let me pull in some stock ticker data from Apple. So we're going to Yahoo Finance. I use this a lot. If you saw my other videos, I have at least probably 15 by now using Yahoo Finance API endpoint where I'm pulling in ticker data for Apple. You can get all kinds of data here related to treasuries, interest rate changes. Yahoo Finance has a ton of data, options prices, equities, good coverage for equities. It does not have things like unemployment rate or an inflation rate. You'd have to go to the Federal Reserve for that, or Fred. I have an article about that. I'm actually going to post that video later today. That's very interesting too. So I have my data frame here. We have the closing price, the dates, and we have 7 through 14. So here we just have one day with one closing price, 242 and change, 246, 236, 234, 233. So it went down a little bit between the 7th and the 14th. Went down about maybe $10, $9, $10, whatever the thing is. So not a big move. Let's compare these movements and prices to the news articles. Okay, so I'm going to merge these two together. So we have DF Apple stock. That's this data frame right here, and we have this one called DF Apple News. Okay, so I tried to name these things appropriately because it's less confusing for me and for other people too. You can call this data frame 1, data frame 2. But if you look at this a couple days from now, or weeks or months from now, it's not going to make any sense. So the more meaningful you make these terms or these data frames or these objects, the better you're going to be, right? And the easier life is going to be. So we have the title, sentiment, subjectivity, the closing price repeats. So we have 1/8. So this is January 8th, 8/8. We have the same price. This is totally fine for analysis. This is not a duplicate because these sentiments are different and the title of the article over here is different. Now, in another scenario, if you see these duplicates there and there and there, you should delete those. Definitely don't do that. With this type of analysis, it's totally fine, okay? So we are going to use the date time and just try to say, or just convert the date time to real time, okay? I think one of these actually had like a date timestamp. This has a date, so that's fine. I think this one, yeah, this one's a little wackadoodle over here. I like that word, wackadoodle. Kind of means wacky. So you have a date and a timestamp, so it looks like 1300, 17 hours, 33, and some nanoseconds. That is definitely not useful for this scenario, the analysis that we're doing. We don't need nanoseconds, we just need dates. That's it. So I'm going to convert all the dates to a date, and then I'm going to filter out anything that has a polarity greater than 0.2 or sentiment greater than 0.2, because we saw some were zeros. Like this zero over here, this zero is not helping me at all. This is just neutral. It's nonsense. That article might be kind of cool to read, but it's not positive, it's not negative, it's just in between. And I can't use in between to make a determination of whether or not a stock price is going to increase or decrease. I need movements in the polarity right here, the sentiment polarity and the sentiment subjectivity. Otherwise, the analysis is meaningful, right? Like I need ups and downs and be able to track those. If I get those ups and downs, I can make a determination about whether Apple is going to move up or down, right? Based on the news. So we have significant events. Everything was merged into this data cell. You can see that right there. So I think we're in good shape with that. And we're picking up two columns. This is column polarity and column subjectivity. That's just like you see right there. Boom, boom. And then we have closing Apple. So we're taking three columns. This is the independent variable. Okay, this is the dependent. The dependent, so y is dependent on the independent. Independent is independent of everything. The y is the target variable, depends on the x. Okay, so if you look at my other videos, I explain all that in the machine learning series I did. So I am going to run this random forest regressor and look at the results. I see an R squared of 0.408. 408. So not substantial, not huge. It does start with a random seed. Let me run it again, see what it is. 0.408, 0.42, 0.41. Let me do two more. 0.41. Okay, so I think it's about 0.41. Yeah, 0.41. Because see, because this model starts with a random seed, the initiation is random and the outcome is trained and it's predicted, but the initial value that's put into the model to learn from is random, right? So it can go a couple different ways. It can go up, down, sideways. Random. So this is exactly how it works. So we have negative 0.3075 for polarity, and sentiment subjectivity is 0.6250. Because I'm going to put these right here, these numerics, because this is regression. These go over here, separated by a comma. Okay, take that back because I have a little space at the end from the copy, and put a comma in between. So the last two here, we expect the price to be 23388. So if I know that the polarity of a news article that's coming out is 0.375 negative, 0.625 positive, I would say 0.233. So I'm going to put that down here, 0.23388, 233.88. Let's see what it is. Control Enter, 23388. So that is right on. So that's actually good, but I'm kind of surprised because the R squared is only 0.41. It was that accurate. That's like too good to be true. I mean, I thought it was going to be off a little bit. It's spot on, right to the penny. Let me do this again. Control Enter to refresh the model. 0.415. Okay, I think we established it's about 0.415. Let me get another sentiment. I'll go up to the top here, 0.1 and 0.2. Okay, so those are nice round numbers. We don't have all the details we had with the other guys. Okay, cut that. Whoops. That didn't take the formatting, so that's fine. Oh wait, it took the last one. It didn't even copy. Okay, let me do this again. Control a couple of times just to make sure. Okay, yeah, got it. So now 0.1 and 0.2, let me run it. And we're predicting 0.24269, okay? So I would be surprised if it's right to the penny. I don't think it's gonna be that. I would be shocked, but it should be pretty close. Let's run it, make the prediction, run it. 0.24, 0.234. Okay, so it's off by a little bit. So if we put that into Excel, 0.242, 242.69 divided by 234, 4.20 minus 1 to get it to round. Oh, I didn't put the equals. Okay. So off 3%. Okay, so not bad, not bad. So this is going to be about 40% accurate. This is actually only off by 3%, so it's pretty good. And we're making these values of the sentiment from those news articles to predict the future price of Apple. I said it's going to be 242. It comes up 234. So the under, and that's okay. We're within 3% threshold of where we need to be. So I think it's fine. One thing I'll say for sure is we only have two variables here. So if we could get more, it would be more useful, right? If we had 10, if we had 20, even 30, 40, we only have two in this case. So this modeling experiment is a little bit sparse, but you know what it is, what it is. We're just using what we were given. We could try to mature this model a little bit and try to capture more data points. I do have a video I'm going to produce pretty soon that uses sentiment analysis plus things like treasury yields for 1, 5, 10, 30-year treasuries, unemployment rates, inflation rates, interest rates, things like that. So we're going to cover a bunch of things. We'll see a more robust analysis. This is just pure news sentiment and trying to investor confidence or stock rates. And let's calculate again the closing prices. We are going to take the merged data frame, closing Apple price, get the percent change, and the market direction. Is the daily return increasing or decreasing? And then again, we have the sentiment polarity and the subjectivity. Let's use a classifier this time. Before we use a regressor, right? So a regressor runs on numerics. A classifier runs on labeled data, so non-numeric data. So let's run it and see how predictive the predictive capabilities of this model. It comes up 1.0. Okay, so it's able to make predictions almost with extreme precision. 1.0 recall, F1 score, accuracy, recall F1 score, and the weighted average is the same 1.0. So it's a little bit too good to be true. That's okay. I think I know why. We only have two features over here that we're testing. It's not a super robust data set. I would like to get more, maybe half dozen to start with, but we just have two. So we're just creating a hypothesis here. Can we use sentiment analysis and news to predict stock prices? According to both models, yes, we can. Both are working. But before I put real money into this and invest millions of dollars into Apple, I want to get more features and a deeper history too. I think we just went back 1 week in time. But again, you can make the argument like 1 week is sufficient. Are people going to go back 2 and 3 and 4 weeks and read and then make investments? Not what happened 3 4 weeks. So probably a shorter news time span is okay. But again, I think more features over here to test would behoove us, and it would make for a more robust and more rigorous type of analysis, right? So Control Enter to run this. This is a time series analysis. Surimax, I have a video on this and some other time series models, LSTM and REMA, and a couple others, right? This is just one of those 7. So you can look for my time series video if you're interested in that. And we are going to make a forecast and print the results, right? We have a seasonal change over time for the past week, and we are going back 10 steps. This is an exogenous 10-step exogenous test, 10 steps back in time. Okay, and that is running. We're looking at sentiment polarity, as the exogenous variable. So that's the external variable. Again, the y is a dependent. I'm trying to predict closing prices for Apple, and it's done. Okay, so you get the closing prices 23388, 8888. So these are pretty much the same, and I know why that's happening. 23387. This comes from over here, 23388 and 87. It goes down just a click over here. So these are repeating. So as I think about it now, like sometimes I figure these things out as I'm going, maybe it might make a little more sense to take one closing price, take the average of all of these and group by the date. So I would have one date, an average of all of the sentiment polarities for the date, average of all the subjectivities, sentiment subjectivities by the date, grouped by the date. Sorry, my light went out. Where's my motion sensor? Okay, there we go. Back in business. So that could be another way to do the analysis. This is really more subjective. I'm not saying this is absolutely the best way and that is the best way, but another way to do it is to take the mean of all these per date, group by the date, take the mean of all these, and then get one price for Apple per day. Because we did the time series, and these numbers are already close to being the same. They are changing a little bit, but I would expect like a little more variation, at least a couple of dollars. This is just pennies right here. So it is what it is. That's the type of analysis. It's working. It's doing exactly what we told it to do, so that's fine. And again, these things are a little bit arbitrary, a little bit subjective. You could do the analysis a bunch of different ways. What happened here? Value of color, received cluster. Value of color is not in the name. Wait a second, color. Why is color not in the name? Let me figure this out. Cluster color. Well, it should be merged df. Okay, let me see the merged df. Where's the merged df? Maybe it's not in there. There's the merge df. Oh, they didn't have a cluster. How did it even work yesterday? Well, I ran that. Not sure how that worked. Let me do not by cluster. I'll do by the title. Let me try this. I don't know if this is going to look nice or not, but we can try it. So color, title, Control Enter to run. Really good enough for our purposes here. Okay, when you run these, oh wow, there's a lot. Oh man, that's too many. Yeah, it's not gonna work. That's not gonna work. It's too many details. So that's fine. Cluster would be better. Why did it not get the cluster? Let me just see something here. Weird. That's weird. That's weird because that totally worked yesterday. I must have changed something. Oh, okay, that's fine. So maybe I'll do this. That's it. By the closing price. That's fine. Maybe before I roll this out later today, I'll just go back and just set up a k-means cluster, and then I'll get that color cluster. That might be worthwhile to look at that. Okay. Oh, and all these things are pretty similar, right? Okay, that's fine. That's fine. I was hoping for, you know what? I must have done a cluster and then deleted it or something. Legend cluster, because I didn't have the cluster. It's weird. Very weird. Let me look at one more thing. Maybe. Oh, that's fine. You know what? I think this is totally fine. I'm going to go back before I post the video and put in the cluster and make the color relative to the cluster. So I will change that, not in the middle of the video here, but I'll swing back and change that. But here's the point, okay? The cluster colors will show up slightly different, but here's the result. You see the Apple price 234, and then the title of the article. So stake, what was it saying? Stake decreased by Trinity, so they're selling shares. Apple's going down. Why Jim Cramer thinks Apple is the ultimate free rider. Sentiment 2, subjectivity 9. Jim Cramer always has subjectivity 9, right? Like that guy is like belongs on another planet, right? So this is 4.7, polarity 5 and 0.3. You can see the news article, and 236 is the stock price. And then is Apple the best buy in 2025? Apple 234, sentiment 1, and subjectivity 0.3. Okay, so you can see how everything's clustered. You have the Apple price and the sentiment polarity on the x-axis and subjectivity on the y-axis, so that's fine. I'll go back and fill in the cluster color after I finish this up. We're almost done here, guys, so just hang tight for a couple minutes. Calculate the daily returns and do feature engineering. So this is going to give us a percent change, and then add that to the merge data frame under daily return. We can see that we're here, percent change, daily returns. Oh yeah, daily returns. So this small return, right? Because nothing happened, 241 to 240. So there's a change, but 241.9 to 241, there's no change, right? So as I'm thinking about it, we should probably do the group by dates and take an average of these. That might be better. Maybe it's no better. I don't know, because you have to run the experiment to find out. But that would be a slightly different type of analysis that might be worthwhile to take. So we're looking at a few different independent variables that we just created. Sentiment polarity, we had that subjectivity, rolling sentiment polarity, and rolling sentiment subjectivity. So that was these new features that we just added here. And let's see, with these additional features, what the outcome is going to be. Okay, let me go ahead and run this, Control Enter, and we have our y-dependent variable. Right, here's the independent, and we're going to look at which features have the Serena Max has no attribute feature importance. Serena Max. You know, I could swear this was working because I had this chart all set up. So I apologize for this. I will swing back and I'll fix this, and I'll fix the clustering issue. I don't think it makes sense to do it in real time because I don't want to waste everybody's time here. But let me just do a quick search for this. Control F. See if I can find that up. Feature importance, maybe without the underscore. Let me try it without the underscore. Sometimes I have it, sometimes I don't. No, they don't have it. So this is gonna require me to just dig in. I should fix it in 5 or 6 minutes. I will post the update with all the fixed code over here. Everything will be running before I post it on YouTube, so you'll have that. You can copy and paste the code and run it on your own system and see what the outcome is, okay? So what do we do here today in summary? Analyzing news sentiment is a predictor for investor confidence. We saw the regression model work, the classification model work. We made predictions. Understanding market dynamics is one takeaway here in advancing investment strategy, supporting quantitative models, real-time decision-making, and broader economic and social context rather than just your traditional fundamental analysis and your traditional technical analysis. You can add this to your toolbox as another type of analysis you can do to make your overall research for investment opportunities more robust, more refined, and more rigorous too. Okay, so that is it, guys. I think that was a ton of knowledge I dropped on you today. Hopefully that was useful. Hopefully you learned something productive out of that, and hopefully it was good use of your time. Okay, thank you so much today. I will fix up these 2 mistakes and post the final version of the code very shortly. Thanks again. Bye.